All right, so today's case study is going to be on a trade I took on US 30 on Friday, July let's see. July 5th, okay? So I took a trade on Friday, July 5th. It was a long on US 30, and let's just get right into the breakdown. All right, so starting off from the daily time frame, as you can see, the market took out this high, okay, which fueled the market to move lower into these areas, okay. After that, the market started moving to the upside, and as we all know, the market needs to induce higher before it can go lower, and it must induce lower before it goes higher, right? So all the market did was come here, right, respect this area, and respected it because this was a liquidity block, okay. Now, does it mean we can start longing from here? Well, we have to see where liquidity is first, right? So we can't just blindly start taking longs because it's a liquidity block. Anyways, the market starts moving to the upside, right? Ends up taking out this high over here too, and comes into this area over here, and then has this bearish candle. Okay, so the daily isn't really telling me too much here. So this is where you go down to the 4-hour, and what I saw in the 4-hour time frame was basically the market moved to the upside, creating higher highs and higher lows, right? And that does is basically establish a trend for, let's say, the retail traders, okay? So, after the market prints these highs, creates this low, you can see high was created, low was printed, a little higher high, pulls back, respects a low, so builds liquidity, okay? So the market builds liquidity there. And all the market does is come into this liquidity block right here on the 4-hour time frame, and then start moving lower, okay? All right, after that, I did expect the market to have a trap sellers, and then kind of expected the market to move lower towards these areas. All right, so let's mark it out. Okay, so I kind of anticipated the market to do this. However, obviously, it doesn't do that because after trapping sellers here, so mark it out black. After trapping sellers, it comes into this liquidity block. Comes into this liquidity block right here, respects it, and then moves lower, and you can see just about has a break of structure to the downside. Okay, so as you can see, the low was taken out, resulting in a BOS, change of character, whatever you want to call it. And all that does is induce sellers, okay? So knowing we can't trade with structure, automatically we have to wait for either more price action to develop or the market to take out this high over here, right? But we can't always expect the high to be gone right away. Or we can't expect the high to go right away. So for that reason, we have to wait for what the market does. All right, so after having this BOS to the downside, so let me actually mark it out. BOS. All that does is induce sellers. Okay, so where are sellers getting induced? Well, number one, traders that seen this as their POI or whatever and entered here, they got their liquidity sitting above the high. Okay, after that BOS, what does it do? Induces sellers to sell from these highs. Okay, obviously I'm just grabbing a section of the wick. If you go down to the 1 hour time frame, I mean, you could grab the whole box if you want to. Right, but let me just mark out the wick for now. Just looks a lot cleaner. Okay, so as you can see, BOS to the downside, sellers induced. All the market does is pull back all the way back to the extreme, respect it. Okay, so respecting does what? It builds liquidity. Okay, so let's mark out. Let's put a dollar sign right here. Builds that liquidity, moves lower, and has this internal break of structure. Okay, so think of it as, you know, they got their little order flow established, pulled back, BOS to the downside, pulled back, BOS to the downside, right? They got their little order flow established, just inducing more sellers, right? And this would be a buy opportunity for us to take it to the highs, okay? Because we have that engineered liquidity, so we have a reason for the market to go up to the highs, okay? All right, so what ends up happening is the market on the 1 hour time frame moves higher, pulls back, right? Takes out a 1 hour low right here. Okay, so this ends up being a liquidity block, and all the market does is just shoots up to the highs, right? And what it does is the market establishes a little trend right here. You got your, let's say, a higher high, your higher low, then you got your another higher high, right? And as you can see, the market still stays under this high right here. Okay, so all it does is just build more liquidity for us to long towards. All right, so on the 1 hour time frame, I had this liquidity block marked out. Okay, let's just turn that to blue. And also, right above the liquidity block, what gave me the confluence and what gave me the confluence to take the trade from this liquidity block was this buy trap that happened right here. Okay, so BOS to the upside. What does that do? Induces buyers. Okay, where do buyers get trapped? They get trapped right here. Let's mark that red. They get trapped right there. And as you can see, the market takes it out. All right. So obviously this is a little, like, it's not that clean on the 1 hour time frame. So we'll go down to lower time frames and I'll show you. But essentially, I had the 1 hour liquidity block marked out. So once the buy trap happened, if the market didn't come all the way into this liquidity block and tap into it, then I wouldn't be part of the trade, right? I would look for a confirmation entry on the 5 minute or the 1 minute time frame. Usually on the 5 minute time frame. I don't like hopping on the one. I mentioned that before. And yeah. All right. So on the 5 minute, you can clearly see after this low went, right? News took out the low, and what ended up happening? Shoots up and takes out these highs. Okay. So as soon as the high goes, that's the BOS to the upside, right? It means I can't buy anymore. I have to wait for what the market does. So what did I do? I waited. And as you can see, this move up induces buyers. Okay. And obviously, I have to wait for buyers to get trapped. All right. After taking out the low, the market moves to the upside again. Takes out this high right here. And then moves lower. Okay. So you can see on the 1 minute time frame. I don't really need to go on the 1 minute time frame, but just so you can see the individual candles. After the low went, BOS to the upside. Technically, I had it right here. You got your BOS to the upside. And then the market moves lower. Okay, so I still have to wait, because I'm not allowed to enter unless if the high goes, right? Because then I will be trading with structure and it's not probable. Okay. Market comes lower, traps buyers again. All right. And then what ends up happening is the market actually comes and taps into that 1 hour liquidity block. And that's essentially where I had my entry. Right. So as soon as the market taps into this 1 hour liquidity block, I pressed buy. Okay. So I pressed buy there, kept my stops below the low, and then targeted the highs. Okay, so I took little partials here above this high and then held the rest of the highs. All right, so this goes to show, I took the trade off the 1 hour time frame only because it provided an entry. However, if it didn't, I would have waited for an entry model on the lower time frames for me to take the trade, right? And unfortunately for the lower time frame entries, it didn't give a clean entry, right? It didn't give a clean entry model, and so that's why I couldn't take a confirmation entry and I couldn't add to my position. Okay, so all the market did was move here, right? Just take out lows each time and then moved higher. Okay, so after taking out this high, if the market pulled back and took out the low, right, trapping buyers. So essentially, as soon as the market went above this high right here, the market came lower, took out this low, I could have entered buys. However, obviously the market didn't do that, and for that reason, I am not allowed to take the buys. Okay, because remember, all the market does after coming into this area is move higher, printing a low, and then moves higher, right? So this is your higher high, your higher low, and then a higher high. It didn't come back lower, trapping the buyers, and for that reason, no entry model for me. Okay, and all this has to happen while it's staying below these highs right here. Okay, essentially that's where the trap is. And then, well, technically this high too. And yeah, after that the market moves higher. It does take out the high. However, as you can see, market moves here, right? Creates highs over here. Your low, higher high, right? Break a structure, higher high. Pulls back, respects this. So now there's liquidity sitting below here. Okay, these areas right here. So what the market does is come down, take out all that liquidity, and then move to the upside. Right? Probably sneak in a little trade right here. Your BOS traps buyers, and then this being your liquidity block. Okay, so liquidity block, BOS to the upside, trapping buyers right here, entry stops below the liquidity block, and then straight to the highs. Okay, unfortunately the timing wasn't great. It's Friday at 1 p.m. No one's trying to take trades at that time. So yeah, I only had one position straight from the 1 hour liquidity block, and then I just rode it straight to the highs. All right, so that was a quick, easy move on US 30.